Shane, you're very welcome. Yeah, how are things up in Cavan?
Thanks for the introduction, Peter. All good.
Yeah.
Thanks for the great intro there. So, I suppose, guys, just really firstly to kind of give a bit of context on the webinar. You know, myself and Peter and Una and Amanda and Wendy were having a chat a couple of weeks ago, and we thought it'd be a good idea to have just a webinar for you guys to help to get you set for the income tax deadline, which is coming up at the end of October. So really, I suppose the main focus on today is just kind of to help you with a few points kind of around that and a few tips on helping to get us organized and get you in the best position that you can. And then also we will touch on a few points for some guys might also have limited companies, but touch on a few points for that. And then also just a few kind of tips then for moving forward then even after income tax deadline, which will be a benefit.
Shane, do you want people to ask questions along the way, or would you prefer to hold them till the end?
I think after each section, Peter, we might kind of stop. Sorry, guys. So just in terms of what we cover then, so there's a couple of kind of main areas we cover. So we firstly look at a couple of main items in sole traders, and then we move on to business expenses, and then we'll cover the VAT element, and then move on to then topics around limited companies, and then just some tips and good practices then moving forward. So maybe Peter, after each of the topics, for example, the sole traders, we might stop then, and then if there's kind of any questions, Q&A, we can kind of address them then. But then just to be conscious, guys, if there is maybe VAT questions earlier on, if we just wait for some of those might be answered further down then in the VAT section, or for example in a company section, or they might be answered there. So I think that should work. And then any questions we don't cover kind of as we move on through the webinar, happy to cover them then towards the end.
Great. Okay, Shane, off you go.
So firstly then, if we just look, I think mainly a lot of this will apply if you're a freelancer operating sole trader. So that's like, you know, we are not operating as a limited company. The first kind of two parts we look at that. So really we look at the tax filing and the payment deadlines there, what's required, and then just a couple of kind of tips to kind of get you set on the way there, and a few things to be aware of. So just firstly then, I suppose on sole traders kind of, or if you're operating as a freelancer, so the key dates and to be aware of here, if you operated as a sole trader in 2021, you are required to file an income tax return by the 16th of November this year. So that's just 6 weeks away. I know just the email mentioned the 31st of October, but if people are filing on ROS, the deadline is actually extended to 16th of November. So I'd imagine 99% of people are hopefully filing on ROS. So the deadline then is 16th of November. So it's 6 weeks away tomorrow. So I would definitely advise people to, if they haven't already done so, to start getting the wheels in motion there. Just then, in terms of on your tax return, like, you know, what you need to do or what you need to include. So the main details you need to include firstly is, you know, just some personal details about yourself, and then details of all your various sources of income. So this could, for example, consist of if you have some maybe other part-time or employment income, and then your self-employment income that you would earn as part of a freelancer. Also details then on maybe any social welfare income you might have earned during the year, for example, maybe some illness benefit, or just conscious then that last, you know, people also might have been in receipt of PUP payments. Those details and income would also need to be included as well. And then the other common examples we would see then is, you know, medical expenses or pension contributions as well. Those are kind of the main things we would see. Other kind of things which may apply to some people, but just to be aware of is you are also required to detail asset disposals. For example, if you did sell a house or if you did sell stocks and shares, that sort of things. And also, if you receive dividends from any companies in terms of stocks and shares, that would also need to go in as well. But I think for the purposes of this webinar, the main points would be, you know, your income, your self-employment income, if you had other employment income and that sort of thing. The good news on that, if you are thinking now, how am I going to get all these details? On ROS, your ROS profile should be pre-populated already, or you should be able to get a lot of this information in my account. So for example, your employment income should be there already. Also, if you have social welfare income, the likes of illness benefit or COVID payments, that information should be there already. So the good thing is you shouldn't have to go scrambling for that information. Just the other thing then, I would also say on your tax return to be aware of then, and this is something that can catch freelancers, I suppose, by surprise, especially in the first year, that you are also actually required to pay preliminary tax. So preliminary tax is a payment of tax on account. So you need to pay a payment of tax on account for 2022, and the payment on account pay date is also the 16th of November. There's 3 different ways that you can pay that preliminary tax. So you have 3 options in terms of how much you pay. You can go at 90% of your estimated tax liability for 2022. So again, that would be an estimated figure. You could go for 100% of your 2021 tax liability, or you could go for 105% of 2020. The most common or the most popular one we would see is people usually go off 100% of the 21 tax liability amount. So they're kind of the main high level details. We'll get into now in a second in terms of just kind of some tips, and then we'll move on to the expenses later on. Just see a few questions in the chat there, Peter. Is there anything there at the moment you want to?
No, there's just a question about the slides. Can I just go back on the details to include, Shane? You mentioned the PUP payments, and I'm sure there are a number of people maybe on the call today, but certainly a number of freelancers who are on PUP payments for good reason during the pandemic. But they are subject to tax, yeah?
Yeah, so your PUP payments, they will be subject to tax. They won't be subject to USC, so that is the one benefit. That anything from the Department of Social Protection wouldn't be subject to USC, so it'll just be the income tax, yeah.
Okay, and all of that detail is on the Revenue Online service, yeah?
Yeah, those details should be in your ROS profile, or your My Account if at the moment you're not kind of set up for ROS.
Yeah, there's a question here actually from Julie. Do you calculate prelim tax on projections up to the end of the year?
Yeah, correct. So it would be projections. It wouldn't be up until, I suppose, now October, to be up until 31 December. And that's I suppose the risk. There is a bit of uncertainty there in terms of, projecting out 90%. So that's why usually the most popular option there would be people to go for 100% of the 21 tax liability amount.
Okay, and then presumably if you're overpaying, they'll give you a rebate back at some point in 2023, yeah?
Yeah, correct. We might go through that in an example on that then, just kind of on the next slide, in terms of how the interactions between the liability and preliminary tax works.
Okay, there's another question here from Claudine. I'm not sure what BTWEA is, but BTWA shouldn't be included in tax calculations, right?
BTWA?
Sorry, back to work enterprise allowance.
Oh, sorry.
Yeah.
I haven't actually seen that one, so I'm not going to give a definite answer. But if it's, I haven't seen one. So maybe if you do have an accountant, Claudine, just check with that. I haven't actually seen that one myself. Yeah,
she's saying on the revenue, she says she thinks it's not taxable.
Yeah, if it's something similar in nature to the likes of maternity leave or something, then it probably shouldn't be.
Yeah. No, that's great. Look, keep the questions coming, guys. Yeah, Shane, sorry to interrupt.
No worries. So then, in terms of then, guys, so the main tips then I want to do at the moment, the first thing is that I would advise that you kind of, if you haven't already kind of touched base with your accountant, or if you haven't already got your tax return file, I would definitely advise to act now and start getting it organised. So in terms then of what you need to do, the main thing is to gather the information on, I suppose, most of the work is going to be, if you're a freelancer, it's going to be gathering the details there of your income expenses. So how do you do that? I would advise reviewing your bank statements. For example, you probably have either a Bank of Ireland or an AIB account. You might also have a Revolut account. So I would go through the account for the full 12 months last year, tot up all your income. And then similarly for the expenses, most of them probably went through one or two bank accounts. I would also go through them to kind of identify all your expenses. And then depending on, I don't know, like some people, in terms of how they work with their accountant, some people might be using an accounting software, so that'll make your job easier. If you don't use an accounting software with your accountant, I think it's just to keep it simple, the likes of Excel. So put all your income into one section in Excel, then put all your expenses into another section. So that's kind of that's the main kind of piece of the work there. And the more work you can kind of do on your side on getting that information together, the easier it makes for your accountant. And the more value add they're going to be able to provide you on just giving you better advice, and they're not going to be chasing you and just to get the information from you. Just another tip then to be aware of when you are filing your income tax return, if you are married and jointly assessed, it can be beneficial to share tax bands and tax credits. That usually comes into play if either yourself or your partner has a taxable income amount of below 37k. So 37k is the number to watch there. If one of you has an income below that, you can actually share tax bands and credits between both of you so that you can fully utilize them all. The other important one thing to be aware of is if people are considering making pension contributions, you can actually put in a pension contribution now and include that in your 2021 tax return. So that pension contribution would have to be paid before the 16th of November. So for example, if we just assume in this example, if you're a higher rate taxpayer, if you put €1,000 into a pension, you're going to get income tax relief there of €400 on your 2021 tax return. But then that's also going to bring down your preliminary tax for 22. So the cash flow saving there is, so while you're putting 1,000 into a pension, you're saving on cash flow there of 800 on tax. And just the other point then to be aware of, if people are then struggling coming up to the deadline with kind of you know, in terms of if they don't think they're able to pay it, I would definitely recommend filing it on time, even if you can't pay the taxes, because there's a late filing surcharge, which is 5% of your tax liability amount if it's filed within 2 months late, and then if it's more than 2 months late, the liability goes up to 10%. But even if you don't have the cash to pay it, I would definitely recommend that you file it on time, because then at least you're not going to get hit with the late filing surcharge. It'll just be the late interest payment on the late payment.
Shane, there's a question here from Anne Marie, and she's saying that she's in the process of selling her house. Does this have to be included in her tax return? And if so, why? Yeah.
No, Anne Marie, that will be included next year in your 2022 tax return. Just conscious of that, if it's I presume you probably do have an accountant giving you advice on that if you do have one at the moment, but if it's your house you're living in, there's probably no capital gains on it due to principal private residence relief. But if it's an investment property, there is what's called a CGT deadline there of the 15th of December if you sell it before the end of November. So just be aware of that CGT deadline.
And just on back to the tax bands and tax credits, the joint assessment thing, Shane, a question here from Alison. Where can I find out how my tax band and credits are shared with my husband? Again, not clear apparently from her husband's revenue.ie.
Yeah, it is actually quite difficult to see it. It was one I was looking at for a client last week. Usually, Alison, through the My Account, and then normally there's a drop down on your two names between, I suppose, yourself and your spouse, and then if you click into you'll be able to see what tax credits are shared. So if you want their tax credit certificate, you'll probably have to work it out a bit. So if his tax credits are 1,700 by 3, a person's usually just entitled to 2, the POE one, and then the personal one. So if he has 3, he probably has one of your tax credits as well. So that's where I go and check that.
And there is that cutoff, Shane. You're saying at around about 37.5, is it?
It's about 37.5. It's about 37.5K. Yeah. So if one spouse is earning below that, it's definitely worth looking at. And again, if you have an accountant that is filing your tax return for it, make sure that's what they're checking that for you to see, is it beneficial to go with joint assessment. Okay, great stuff. Yeah. So then if we move on then to everyone's favorite topic, which is the expenses. So the first thing we just say, guys, on expenses is the underlying rule on revenue side and revenue's guidance on this is the guidance they use is that any business expense to qualify as business expense has to be incurred wholly and exclusively for the purposes of the trade. In simple English, what that means is that any costs, I suppose, that are claimed should be 100% business-related expenses. Examples there that could include, like the likes of if you're using different softwares in your job. If we have, for example, marketing and creative people here, you might have Canva, you might have iStock, Shutterstock, Adobe, different things like that. You might have, even other things, for example, even like Zoom or G Suite. Other expenses that people, that are often overlooked. Some of the more obvious ones are, if you have printed and stationery, and again, you're using that for kind of your freelance business, again, that would be deductible. Other things then, office expenses and equipment, for example, a laptop, keyboards, printers, stationery, that sort of thing, your accounting fees, any marketing costs. So in terms of getting your business up and running, if you're kind of spending money in marketing and advertising, that will be deductible as well. And I know, Peter, you guys had a webinar on this about 2 or 3 weeks ago. So if people are, getting the website developed and the cost of getting the website, again, that's promoting your business. So that will be seen as business cost as well. Other things then will be the likes of training courses, again, to improve your skills as a freelancer and to get a higher charge rate in the marketplace. Again, if that's business related. The other items then are, common ones being the phone, internet, office rent, light and heat, and business travel. Just on the latter couple of ones there, some of them sometimes can have a mix between personal and business use. A big one there being, for example, the phone. If you have 2 phones, if you have a personal phone, the business phone, the business one would be 100% business expense. If you have a phone and it's half and half, usually people say like whatever percentage is business use. So if you use it 50-50, you would take 50% of your phone as a business cost. And then the other one that I suppose that often gets a lot of questions is the likes of rent. So if you actually do rent an office, and that's that should be a business expense, or if you rent a co-working space, other things, for example, if somebody has a home office. So one example we see is if people rent, if you have a couple renting, example, a 3-bedroom house, and they could, or all they need is a 2-bedroom, but they get a 3-bedroom because they want a third room to set up as a sole workspace for their home office. So the portion of the floor space there for that home office could be included as a business expense for rent for the business. That calculation will again usually be done by floor space, and similarly then light and heat as well. In terms of the home office, you would use something similar again, a similar type a consistent calculation again, like floor space or something like that. So yeah, so that's the main ones. Any questions on that, Peter, at the moment?
Yeah, there's one or two, but just to go back on what might fall under business expenses, Shane. So say for instance, people are doing, say, Google ads for their business or for themselves as a freelancer, and look, we do it ourselves obviously for the indie list, but are they claimable by freelancers or by traders? Yeah.
Yeah, so again, so the likes of the Google ads would fall under your marketing and advertising costs. So again, that's a cost that I suppose you incur to kind of directly improve your business. So the way I think of it is this related? It's the simple way I think of it is this cost related to my business or is it personal? Right. And generally, I suppose you kind of know, but most of them you kind of know fairly quick.
Subscriptions to organizations. So if you're a member of, Marketing Institute, Marketing Society, ICAD, any of those type of what would you say, industry bodies?
Yeah, again, that's probably like adding credibility to, I suppose, you as a freelancer in the marketplace. So yeah, again, if that's related to your business or if it's improving your business, yeah, that should be expensive. Okay,
great. Yeah, no, there's a couple of questions here from people. Let me just go back on this one. This is from Anne-Marie again. Working from home during lockdown and paying a mortgage, can I claim any of this back even though it's not rent?
I was thinking that one might come up. It's usually not advised to do anything in relation to the mortgage, just because if and I think it was actually Anne-Marie that so yeah, this actually came from the perfect person. Usually that if you're selling a house, sometimes that can make complications. When I spoke about PPR earlier, that if you're selling a house, that if you are claiming some of your mortgage as for example like a business cost, then all of your house wouldn't be looked at as a personal disposal. So usually it wouldn't be advisable to go near that, no.
There was something announced in the budget there recently, Shane. This is a question that's come up from Rory, but applying for a new government 500 quid rent allowance, probably too early at this stage to say how do you apply for that? Is it?
Yeah, probably too early to. I think once the details come out in the Finance Act and later on in the year, it's probably too early to kind of get into how to apply for that.
Yeah, I presume all that detail still has to be worked out and still either advertised or let people know about it. Yeah.
I think the one like the rent will definitely be well flagged in the likes of even the media and towards the end of this year, yeah. Because I think the first isn't coming out until I think the timeline I mentioned was January 2023 for this year. So I'd imagine as we get closer towards the end of the year, that'll become clearer.
Yeah, okay. This one probably anticipates the next slide. Can you expense things like client entertainment, dinners, etc.? Yeah.
Yeah, so we might move on to that in a second. Or sorry, we'll move on to that in the next slide. Actually, maybe we'll start with that. So yeah, business expense as a sole trader, client entertainment, it's not tax deductible. So client entertainment then as a freelancer, as a sole trader, isn't any benefit because you can't write it off against your tax. If you are a limited company and you have client entertainment, you can't write it off against a tax. You can't write it off against your taxable profits. But the one on the flip side, the positive is you're not paying income tax on it, so you're still saving the income tax element on it if you're operating through the company.
Okay, so I would guess a lot of companies, a lot of individuals might be claiming, so bringing a client out to lunch or, the cost of all those 320 copies or 350 copies mount up. Any of that stuff claimable at all, Shane?
No, so that's all disregarded. It's even in your accounts, whatever, it can be taken into account in your I suppose accounts, but then when you do your tax calculation in terms of your tax return, it's disregarded for tax purposes.
Okay, all right, okay. Okay, do you want to go on to the next one then? And
just move on to the next one. Then just I suppose feeding on then from usually these two go hand in hand from the business entertainment. The other one then that comes up quite a lot is questions come up for freelancers is business travel and accommodation. So as a sole trader in terms of business travel, you can only claim the actual cost of, for example, your diesel, your tolls, your car running costs if you do have client meetings and you do have to travel as part of your business. Some people here might be familiar with, there are civil service rates that are available. So employees or directors do have the options to choose actual or the civil service rates. Unfortunately, that option isn't available to sole traders. They have to just use the actual. Okay. Then the other important one that often does get overlooked here, and it can be a very significant one sometimes, is pre-trading expenses. So what this is about is if you have expenses that were incurred before you actually started trading, and those expenses were incurred wholly and exclusively for your business, those expenses can be included as a cost in your tax return. So for example, if you started trading as a sole trader and you started working in, we said like March 2021, but you actually built your website and you paid for it in, say, like October 2020, if you paid €1,000 for that under the pre-trading expenses rules, you could include that €1,000 as a cost in your 2021 tax return, even though it was incurred the year before.
So even if you say you're registering your company, company registration office, or setting up a URL with, again, Register 365 or whoever the URL body might be, all of that stuff you can claim, yeah?
Yeah, so if you're a sole trader and you incurred the year before, yeah, so it's 3 years before, 3 years before you start trading, yeah.
Okay.
And then the last tip, or I suppose just on the business expenses, again, I say go through your bank statements. You'd be surprised all the ones you will find in there. And again, a work calendar in terms of if you had business travel, business meetings, that sort of thing. And on that, like if you are a high rate taxpayer, every €100 of expenses is probably saving you €55 tax. So that's the best incentive you can get to look for the details.
Yeah. Okay. There's a question from Dan here. I understand you can't claim civil service rates on travel, but you can claim depreciation on a car that you use for work.
Yeah, you could. You could. And the thing is, with freelancers, like a lot of them, just the industry probably not using a car that much really. I know, for example, if you have a tradesperson like a carpenter or someone that has a car, it would be very common in that sort of an industry. It can be done. It's probably not as common for the likes of freelancers if they're not, because they are probably working remotely all the time. But it is possible, yeah.
So things like, say, a new car purchase, none of that comes in under an allowable expense, or even part of it, no?
As a free, well, it would if you're saying, for example, if you said you use your car 50% of the time for your business, then you can reclaim, I suppose, 50% of the capital allowances over 8 years then as a business expense.
Okay, but not the petrol or the diesel or whatever, no?
Well, again, so it all will fall in line. So if you're using the car 50% of the time, that's 50% for your business, 50% of the running costs, 50% of depreciation, 50% of the insurance.
So again, the message is collect your petrol expenses or your fuel expenses for a car and travel and so on. Yeah. Yeah,
and then that's an important one to watch as well. Just on the revenue side, that you would need to have a reasonable calculation to show that you are using it 50% of the time for business travel.
Yeah. Okay. All right. All right, Shane. Yeah, keep going.
So then the other one then that kind of we usually, Peter, we get a lot of questions on is kind of around the whole VAT. And so the next two slides on VAT apply to sole traders and limited companies. So it's the same regardless if you're a sole trader or a limited company. So the first thing to be aware of is that once your taxable turnover goes over 37,500 over a 12-month basis, you are required to register and charge VAT. Just on that, it is important to note that it is a rolling 12-month basis. It's not a calendar year from 1st of January to 31 December. We have seen people in the past that thought, once they hit 37.5K in June, that they would have to register for VAT in June, and then once it got to December, that they could deregister and then start at zero again from January. But unfortunately, you can't do that. It's a rolling 12-month period. On that, if people currently aren't VAT registered, it is important that you do monitor your turnover, for example, in real time every month or so, to make sure you're below that 37,500 threshold. So usually that's around, it's just over €3,000 a month. So to give you kind of a ballpark roughly on when you need to start monitoring it. On that point as well, you do need to be registered for VAT with the Revenue Commissions to charge VAT. Sometimes we have seen people that, maybe mistakenly try to charge VAT when they weren't VAT registered. So you do need to be VAT registered to charge VAT. In terms of...
Sorry, Shane, this has come back to bite. I know a number of people on the Indie list last year where, again, they haven't been tracking their VAT, and then somebody's come along and said, you haven't been charging me VAT, you need to start charging me VAT or whatever. And then it causes all sorts of problems for the individual then, yeah? Yeah.
Yes, exactly. And that's why, it is so important to look at it in real time, because what often happens is if people don't, I suppose, get engaged with an accountant at the end of the year and all of a sudden they have like €60,000 of turnover, and then that 60,000 should have been subject to VAT, and it does become a nightmare at the end of the year. So when you can solve these issues in real time, it does make the problem a lot smaller and a lot more manageable.
Okay.
So in terms then of the filing obligations and the filing periods for VAT, so the most common and popular the most popular method is that the VAT returns are done every 2 months. So for example, the January, February VAT is done together. The deadline then for filing and payment of that VAT return is the 23rd of the following month, which is the 23rd of March. Then after that, you're looking at March, April, which will be the 23rd of May. On that, there's two methods in terms of how you pay VAT. So you can do it on the invoice basis when you issue the invoices, or you can do it on a cash receipts basis. So you aren't obliged to pay the VAT over to revenue until you actually receive the cash from your client. That is the most popular, and it is the most, I suppose, cash flow friendly for all businesses, and that's the one that most accountants recommend.
But you have to declare that, Shane, that's the way you're going to be assessed for VAT, isn't it?
Yeah, you have to declare that at the outset when you are registered for VAT. So that usually is the most popular one that people register on the cash receipts basis.
Yeah. Okay. Look, we know that there tends to be a time lag, particularly for freelance people, of getting paid within a reasonable time. So yeah, that's definitely the one that we would advise for everybody. Yeah. There's a question here from Deanna. Is VAT liability based on being over with your gross income or your net income?
I suppose it's going to be the amount excluding VAT, yeah. Because I suppose the 37,000 is excluding VAT. So yeah. Do you want to go on?
Yeah, no, that's fine. Yeah.
So just some tips then, guys, on that. Yeah, as I said, the most important thing is to, again, keep reviewing your records, to monitor, to make sure you are, if you are below that 37,500 threshold, or if you are above it, just to monitor that threshold. And I suppose compliance does get a bit more, it does get a bit more stringent then, or onerous then, when you are VAT registered. You do have to keep all the proper VAT records. And I suppose you're going to be doing VAT reporting or filing every 2 months. So whereas when you weren't VAT registered, you're probably just doing something once a year. Whereas now, when you're registered VAT, you're going to be filing VAT returns every second month. So another question that sometimes people would ask in terms of is, can we elect to register for VAT before we hit the VAT threshold? Yes, you can, and sometimes it actually can be beneficial to do that. So, for example, if you had a freelancer and, say, for example, they incurred VAT of €500 on their website, and they were approaching the VAT threshold, they hadn't registered for VAT, the next month later they registered for VAT, but if they registered a month before that, they could have recovered the VAT on the cost of, for example, of doing the website. So sometimes if you have a lot of vatable costs, it can make sense to register for VAT before you hit the threshold. Usually for freelancers, I'd imagine they don't have a huge pile of VAT costs. I'd imagine a lot of ones will be the likes of, your G Suite costs, maybe marketing, advertising costs, accountancy fees, and then a website, and things like that will be the most common.
Okay. Just a follow-on question, Shane, just back on that VAT liability threshold again from Deanna, just to clarify on VAT. So just giving the example of, say you earn 38k gross, but then you deduct your expenses and you come down to maybe a net income of 35k, do you still have to register for VAT?
Correct. Yeah. Sorry, Leanna. It is. You do. It's based on, I suppose, your top level sales amount before you take off any expense.
Okay.
Then,
right.
Just on certain points, then, in terms of there's certain items that you cannot reclaim VAT on, and this is the same if you're a sole trader or if you're a limited company. So you cannot reclaim VAT on business entertainment costs, which is the likes of food and drink. The majority of business accommodation costs are also petrol.
Okay. But if they're incurred as part, just again to clarify this, Shane, this I know is probably asking a stupid question, but I can be that individual today. So you can't reclaim the VAT, but can you claim the other part, the non-VAT bit?
Oh yeah, yes, correct. So you can still in terms of these costs, like you can still include them as a cost in your accounts, but you just cannot reclaim the VAT on them.
Okay, all right. And that's why it's important to collect, I suppose, again, the kind of receipts showing the VAT amount and the non-VAT amount, yeah?
Correct. Yes. So again, thanks for bringing up that point. Just so in terms of you are reclaiming VAT on your costs, you are required to have a valid VAT invoice from, from your supplier. In terms of a valid VAT invoice, that would usually, it would include, it would include their VAT number, their name and address, and a breakdown of the VAT. Similarly, on the flip side, if you are selling your services, your sales invoice should include, the date of issue, a sequential invoice number, I suppose your name, your address, your VAT registration number, your VAT number, so your VAT number is most likely, if you're sole trader, your PPS number, and then also to include the customer's full name and address and the breakdown of the VAT rates.
Okay, all right. Very good.
So then moving on to the companies, I'd be hoping that if people do, if they are operated as a company, they do currently have an accountant. But just to kind of touch points on refreshing these, the main kind of things around this. So on your 2021 company tax return, if you had a 31 December year end, that corporate tax return would have been due for filing on the 23rd of September, which would have been last Friday. And again, just to stress, that is for companies with a 31 December year end. Similarly to sole traders, companies do also have a preliminary tax obligation. It is quite similar, but the deadline for payment for, I suppose, the current year or payment on account for 2022 is 23rd of November. A few tips then in terms of which people are likely aware of in terms of a small taxable incentives there to claim from a company is the small benefit exemption now from the budget last week has went up to €1,000 per employee. There's other sorts of small benefits there. You can claim one medical appointment per year. There's an e-workers allowance of $320 a day. So roughly, if you have, I think the average is 220 work days per year, it's about €700 or €800. Again, that's a tax-free amount. And the final thing is then that sometimes people often miss or don't realize until it's too late. If you want to do a pension contribution through a company, it has to be done before the financial year end to be a tax deductible expense, or else if it's not done before the financial year end, it's pushed into the following tax year.
Most of the people, Shane, on the indie list would be sole traders. And I know there's, we've had a separate session with Contracting Plus, who I'll talk about later on, but there's, if you're trading at a certain level, as in a decent amount of money that you're earning a good living from, there's a lot of benefits attached to setting yourself up as a limited company or part of an umbrella company or whatever. Yeah,
there's definitely a lot of benefits there. Like, I know sometimes people are saying, like, what's the limit or what's kind of the rate, or when should I? There's no kind of really set kind of thing. Sometimes it depends on the individual's preferences, how long they're going to do it, but generally, just to briefly if people do even want to take this down in terms of a few differences between a sole trader and a limited company. So I suppose firstly, you're getting the small benefit exemption there through a limited company, which you aren't getting as a sole trader. If it's €1,000, that's roughly, if you're paying tax at the higher rate, that's going to save you 55% tax on that, so about €550. You can also expense one medical appointment per year through the company. So, for example, you could go into the Beacon, get a medical checkup done for £500. Again, if you look on the revenue website, that's allowable. The other one is the e-workers allowance. I know you can claim the actual light and heat cost, but sometimes the e-workers allowance, it's just if people are kind of don't have much time, it's easy to claim that. It's $320 a day. Again, that's about €700 of an expense as well. So half of that is about $350. On the pensions, so the pensions is there's kind of a slight anomaly there that sometimes it gets missed. That if you pay €1,000 from your company into a pension versus a sole trader, if you do the payment through a company versus a sole trader, you're saving €120 tax on every €1,000 you put into a pension through a company rather than a sole trader. That is because as a sole trader, you get income tax relief on the pension. So income tax, if you're paying tax at the higher rate, it's 40%. But you do not get tax relief on USC, which is, your top rate is 8%, or you don't get tax relief for PRSI, which is 4%. So the 12% is coming from there.
Okay.
But they're kind of there is some kind of longer term benefits as well. And people might have heard of retirement relief or entrepreneur relief in terms of, I suppose, the more kind of annual shorter term quick wins. That'll be most of them there.
Okay, very good.
And
Sorry. Yeah, sorry. Go on, Jane.
Last thing to say on that, then the other kind of, I suppose, benefit to to kind of, if people are going through an umbrella company or if they're doing their own company, and they can get massively overlooked, is actually the fact that once you withdraw your salary from the company, you're paying your payroll taxes or your PAYE in real time. And that can actually be very beneficial because, sometimes a lot of people or sole traders get a big shock at the end of the year when they have a tax liability. Whereas if you're doing the payroll through the company, you're doing it in real time, so you shouldn't have that big shock at the end of the year.
Very good. Okay. There's just a message, just going back on the VAT thing, message from Leslie. She said she asked Revenue to change her VAT filing period to align with the RTD dates. So she only has to file it 3 times a year.
Yeah, there is options there to file less frequently, bi-monthly. That does depend on your turnover. Usually the most popular one is bi-monthly, but it is possible, I think, quarterly and even 6 monthly, depending on your turnover.
Very good. Okay.
So that's the main ones there. Any more questions, Peter, on that? Or?
No, I think most people, I think, are pretty clear on that. As I say, I think I would guess that most people on the indie list are sole traders. There are a few people who've gone the limited company route, and for their own good reasons, it makes sense. Question from Alison: is ROS this is Revenue Online pretty user friendly? From my own experience, it is, and I can tell you, I'm certainly not tax proficient. It doesn't mean I'm not tax compliant, but I'm not tax proficient. But yeah, Revenue Online is a pretty good service and relatively straightforward to use.
Yeah, I agree. I do think it's good, but then I suppose I'm conscious that I'm probably on it every day of the week. Whereas if someone isn't on it for 2 or 3 months at a time, it probably is maybe a bit more difficult to navigate.
Yeah. Okay. All right, Shane. Yeah, keep going.
So then, just in terms of for both limited companies and sole traders, a couple of kind of tips then and good habits to get into for moving forward. I would always tell people is to do. And this probably is more so, it's more applicable or happens more, you would see it more happening with freelancers and sole traders, is do keep 2 separate bank accounts. Have one separate current account just for your business income and expenses, and keep all your personal expenses separately in a separate, personal account. Because then at the end of the tax year, it's a lot easier, or even when you're monitoring your VAT threshold, it's a lot easier if you just looking at one account rather than looking across 2 or 3 accounts. Sometimes you would see people with income and expenses spread between 5 accounts, and it's very hard then to kind of assess what your total level of income is and what your different expenses are. Whereas if you keep all your business expenses in one bank account or even 2, it's a lot easier then to identify your income and expenses. Just on that as well, and speaking of bank accounts, and then more so for freelancers and sole traders, going back to the point I mentioned earlier about, if you do operate as a company, you're paying your payroll tax through your payroll, which is every month. One thing which is beneficial for freelancers, if they have a separate current account also, for example, like a tax account, where every time they receive VAT on the sales invoices, they would shift the money into that tax account so that they're not spending it. And also, if they want to, they can do a projection of their annual tax liability every month, and then save for that every month rather than getting the big cash flow shock at the end of the year when the money is spent. Other tips then as well is, do retain all your kind of, your books and records. And again, it's a lot easier to do it in real time rather than looking for everything at the end of the year. If you do have an accountant at the moment, they probably have a couple of potential solutions for you. They might have like a paperless seat capture software. Some people might be using something like a Google Drive or a Dropbox. So again, just do kind of keep those, and yeah, then just feeding on from that. Don't leave it to the end of the tax year. It is a lot easier to manage these things if you do allocate, time to it every month. It doesn't have to be a huge amount of time. I would recommend, less than 60 minutes a month, set up for an hour on a Friday, even the last day of the month. It should be enough time to stay on top of it all. And then just moving on, we can see there. So yeah, the tax account, I've mentioned that one there. So have a separate, that can be very beneficial to have a separate bank account, a savings account for the VAT and the income tax. And then, do maybe kind of monitor your estimated tax liability regularly, just to make sure you are kind of saving enough in your income tax account for that at the end of the year, so you don't have a big cash flow shock. The other thing as well for freelancers and sole traders, what I've seen a few times is, do have a think before, if you have a spouse that is, that might be in a full-time employment, POE job, do think before allocating your tax bands and credits over to them. While it might, you're getting a big cash flow, they're getting a big cash flow benefit in real time then through their payroll. But then on the flip side, at the end of the tax year, when you go to file your income tax return, your tax bands and credits, some of them have been used up already. So again, that can cause a bit of a shock at the end of the year. So I think it's better if you just keep your tax credits and bans to yourself. And then if there is a benefit, they will all be caught at the end of the year in the income tax return. So you won't miss out on the benefit, but it just does help to maybe cause less of a shock there.
Okay. Very good.
So I think that's, yeah, any questions on that, Peter? I think that should be.
There's a couple of other questions that just came in at the end there, Shane. As a sole trader, do I need to take a certain amount out as drawings as an expense before calculating taxes?
Yeah, that's a good question. That's, yeah, I suppose one that gets asked a lot. It doesn't, so as a sole trader, you're taxing your profit being, you know, your sales, your invoice value, less all your different business expenses. Your own, I suppose, wages or drawings isn't included in that tax calculation. So it doesn't make a difference when you kind of pay yourself or whatever. Usually what in terms of a good thing to recommend to people, or a good habit to be, would be at the end of the month that you do transfer an amount from your business account into your personal account and just call that amount drawings. So that, you know, you do know that that's not a business expense, you know it's your own wages. It doesn't really make a difference in terms of the frequency you do that, if you do it every week or if you do it once a month. I would recommend people to probably just do it once a month at the end of the month, rather than taking out 20s, 50s, 100s, 500s and random amounts all the time, because again, it's hard to identify what's personal, what's business. So I'd usually recommend try to stick to withdrawing 1 or 2 amounts a month.
Okay, this is a question on VAT. So this is for VAT for services outside of Ireland. So in countries, or for companies at least, that are based in the UK or in one case Turkey, what's the situation there?
Yeah, that's a good question. And does come up. I didn't actually include it in the slides because I suppose it's probably not going to apply to 80% of people. But on that, so if in terms of the VAT threshold, we talked about that being 37.5K, and that, you know, it said the word taxable turnover. But if you're supplying services to outside of Ireland, being, you know, the UK or Northern Ireland, that will be outside the scope of Irish VAT. So that, if you are selling to Northern Ireland or to UK, that doesn't fall within the taxable turnover threshold. If you are selling to the likes of another EU country, it is important to remember that if you are VAT registered, there is a slight difference in terms of your VAT invoice. If you're selling, I'd imagine most freelancers are selling, it's business to business rather than selling to a private consumer. So if you are selling, for example, to a business in France, you won't charge them Irish VAT, but on the invoice to the French business, you have to tell them that VAT, that reverse charge applies. You'll have to quote their VAT number on their invoice, and you have to tell them, I suppose, under reverse charge, that they're responsible for accounting for VAT in their own country.
Okay. This is a question on Xero, Shane. So obviously it's a software, a piece of software, accountancy software that we use on the Indie List, and again with Shane's help. So is Xero a good solution for Irish business relative to Sage? Any pros or cons, VAT calculations and so on?
I think you know my answer to that, Peter. Yeah.
Shane is a great ambassador for Xero, and look, you know, we've seen the value of using Xero. We were on Sage before, or when we started the Indie List up first, and I have to say the information that we get through Shane out of Xero, or that we can access ourselves, is just absolutely spot on for what we need as a still a relatively small business, you know. But I'll let you maybe do the ambassadorial thing for Xero.
Yeah, no, I'd be all for it. I know sometimes people might see online saying that Xero isn't exactly configured to Irish VAT compliance and it's not maybe up to scratch as the likes of QuickBooks or Sage. But yeah, definitely a big fan of Xero. That's the one that I go with. Okay,
and I know Sage, you know, great system, I'm sure, but again, from our experience, tends to favor for more larger businesses. Yeah.
Yeah, and the other thing is, I think the big thing, and this was a decision I even made like back a couple of years ago, which one I was going to go with. And the big thing for Xero, and I think for anyone that is using Xero themselves, and you know this yourself, Peter, from using it, it is very user friendly and intuitive. So Sage maybe and QuickBooks kind of maybe more kind of are kind of accountancy focused and can get like they're quite hard to use, whereas Xero is definitely very user friendly.
Very user friendly, yeah. A question from Anne-Marie: what percentage of medical expenses can you claim back as a sole trader?
There's no set percentage, Anne-Marie. It's if you incur them, you know, it's whatever. If you incurred 3 or 4 grand, like there's no kind of set parameter in terms of set limit. Just on medical expenses, I would say if you did, for example, incur medical expense of €1,000, and if you do have medical insurance, the likes of maybe VHI, and if you got a reimbursement for them of, for example, 400, it's only the net amount then that you're allowed to get medical expenses on. So the net amount then will be the 600. But there's no kind of set there's no set limit or whatever.
Okay. And this is from Claudine. She said, I'm starting out. How much can you earn before you need to start paying income tax?
Well, I suppose the USC rates start kicking in at about 13 grand, but before you get into too much of significant money, I would say 18 to 20 grand. There is, Claudine, if you do Google income tax calculators, you know, you'll be able to kind of plug in figures and calculate around it. But roughly, if for next year, the tax credits are 3.5. So I suppose you won't pay any income tax on your first 17,500 euro of income, and then it'll just be PRSI and USC on your first 17.5 grand.
Has that changed, Shane, in the recent budget?
Yeah, so the tax credits would have went up 75 euro each, so that's kind of pushing I suppose the tax credits up a small bit. So now you know you can earn up to 17.5 and you won't pay any income tax on that. And then just also then on the budget as well, maybe and on a related point, the standard rate. So you know you pay 20 this year, you would have paid 20% tax on your first 36,800, whereas next year that will go up to 40,000.
Okay. All right. So it is more beneficial, or certainly there's certainly incentives in the more recent budget for people on lower pay. Yeah.
Yeah, and I think just an important number there for, and you know, the kind of the magic number for all sole traders to be aware of is kind of that number of around 37.5k, because it's when you get to that, that's when you have to start watching your VAT threshold. That's when you're kind of coming into the higher rate tax bracket. So that's kind of probably the most important number for people to be aware of.
Okay. All right. Just to go back, Shane, on the working from home allowance, because clearly most freelancers, or I think a lot of freelancers, are spending most of their time working remotely and working from home. So, you know, the ancillary costs attached to that of light and heat and broadband and everything else, just maybe just refresh people's knowledge in terms of what they can and can't claim.
Yeah, so on I suppose those dual expenses, the light and heat, if people are, you know, if 20% of the cost, for example, of your electricity cost, if you're estimating if 20% of that cost is for your business, I know it's quite hard to, it is kind of grey in terms of you get an exact black or white number. Revenues guidance is once it's a reasonable estimate that, like, you know, you're not taking the once you're not, yeah, altogether.
Yeah.
You know, if it is just a reasonable calculation, and again, it's a lot of these things goes back to like commercial reality. It's kind of like, you know, you can hear it without even getting a calculator roughly off the top of your head what would it be. So again, you know, something that's just and reasonable.
Okay, there's a kind of a simpler way of calculating it. You can go for the kind of the three, is it 320 a day?
Yeah, so for limited companies, you could go with the 320 a day. Usually that's the most popular, and I know, Peter, this is something we talked about before the call, that even it's been flagged in the media in terms of the amount of work sometimes people have to do to get their light and heat costs and all that. If you do have a limited company, people might just prefer to go with 320 a day because it is just more straightforward and it's easy to work out.
And do you have to be a limited company to claim that in that way?
Yeah, you have to be a limited company to claim the 320 a day, yeah.
Okay, I kind of got the impression from some of the stuff in the media that everybody could claim it if you're a worker, yeah.
If you're an employee, then your employer can watch out.
Oh yes, yeah. Okay. A question from Alison. Does Ross work out what income tax USC PRSI is due for me once I put in income minus allowable expense?
It does, but I would definitely recommend. I don't know, Alison, if you have an accountant, but I would definitely recommend. And you know, sorry, this is one of the tips that I should have put down. This is that I definitely would recommend that people have an accountant. So if it's either once a year for their income tax return, or you know, if it's kind of if it's an ongoing monthly relationship to also help with your VAT returns, because you know, sometimes you can forget to tick. You know, I've seen poor people can forget to tick the personal tax credit box in ROS, and you know, that's 1,700 euro. ROS isn't going to tell you forgot to include that, whereas like an accountant will know that you should have included it.
Yeah. Okay. And again, back on the 320 a day e-worker allowance, is that based on a 5-day working week?
Yeah, so that's 320. So it's suppose it's per work day. So whatever, you know, if people are working 4 days on average, you know, if you're talking 220 days per year. So again, it's based, yeah, per day.
Per day, okay, or per weekday.
Sorry, per work day,
yeah. Yeah. Question from Leslie: as a limited company, I believe you can claim motor expenses at 5% of turnover unvouched, which saves having to record it all.
Geez, I never heard that one.
Every day is a school day, Shane. Yeah. Okay.
Just on that point, but I would say it's again wholly and exclusively for the purposes of the trade. Like, you know, there is no blanket rule in terms of in terms of business travel or business motor expenses, you can put down 5%. It's if you are using civil service rates, it's like, okay, is this a business trip, whatever? It always goes back to commercial reality. Was it business related?
Yeah. Okay. All right. Look, there's been lots of questions along the way, which is great. I'm just going to stop sharing your screen for a second, Shane, and just go on to a couple of other slides or whatever, and we'll take more questions if people have them. But we also have a relationship, and Shane doesn't mind me saying this, but like Shane's business, he's working on small businesses now, but in terms of advising people who are freelancers or thinking of setting up their own umbrella company, we started this relationship with Contracting Plus earlier in the year to help anybody who's on the indie list, and a number of people have availed of it, but I don't think a lot of people are aware of it. But if you go onto our website under resources, there is a link into this company Contracting Plus, and they're basically there to provide advice for a subscription. It has to be said, they won't do it for free, but I have to say the people who've signed up for it have really got value out of this in terms of that regular advice, dealing with revenue, looking after your VAT, and all of the other things that just cause so much bloody headaches for people. So I'd encourage you even just to check it out. You don't have to do it, today, but it's there. We'll send on all of these links afterwards. But there's some really useful services that Contracting Plus can provide because they're a much bigger operation, and that's the way they're set up to do that. Yeah, Shane, is there anything else that you want to add in relation to that?
Yeah, I think maybe just following up on that point, as I was saying there, I would recommend in terms of tips for going forward that people do have an accountant. I suppose firstly, like their fees are a business expense, and it's the money they're going to save in terms of the advice. Like they're going to make sure your tax return is done properly, and it's also going to give you more time then to increase your chargeable hours, and it's going to be huge headspace and peace of mind. So yeah, I would definitely recommend that.
Okay. All right. Yeah. Look, again, I'm just conscious of time. If people have other questions, please, by all means, send them on. I just want to give you a heads up, guys, in terms of what's coming up over the next couple of weeks. So just conscious that we're coming up to the end of our nearly 2 o'clock. So we have more of these webinar sessions over the course, certainly up to the end of November. The next one is with a lady called Sarah Duran. Some of you might have seen Sarah. She did a webinar for us last year. She's based in the States. Brilliant freelancer, a project manager overall, but she's going to do a session. She's produced a book as well, by the way, but the session that she's going to do at the end of the month is based on finding clients and then converting them. I mean, we're all kind of looking to recruit new clients to our business, which is something that we don't often get time to do, and particularly when you're working on your own. But again, Sarah will do a really good session on that based on what we've seen before. Aileen O'Toole, one of the founders of the Business Post, amongst other things, a brilliant tech freelancer, but she's going to talk about building your own personal freelancer brand on the 8th of November. And then we've a brilliant session. We saw this man, Kingsley Aikens, myself and Una, about a month ago, and he did a brilliant session on networking, just common sense stuff that isn't often terribly common at the moment, but turning a cold call into a hot coffee, and just brilliant advice. And we're hoping to do that around the 23rd of November. So that's coming up, or that's what we have coming up over the next couple of weeks. We also have, for those of you who are not aware, we have an indie list freelancer group on LinkedIn, which is separate to the main LinkedIn account. And again, it's really there as a kind of a private group. We've chosen not to go the Slack route for the moment anyway, but it's an area that we share a lot of information and, just have general conversations with people around topics of interest and information of relevance to people. On the website, by the way, we also have a lot of other things. I'm sure you've signed up for the indie list and then probably don't engage with the website, but all of our webinars, we put them up there. There's lots of other informational pieces that are also up there on the website. So do, if you get a chance, maybe check those out as well. And we also have a book that we're a part sponsor of with the Freelance Business Group, which is out of Belgium, but lots of really brilliant information there that is freely available. So just get in touch with us and we'll send you a copy of that as well. And that's really it. Yeah, thanks for making the time today. Hope you got some really good use out of that. And Shane, a big thank you to you for putting today's session together. I'm sure that there's lots of people who have more questions as a result of it, but hopefully what you've done today kind of helps clarify some of the things that are causing people headaches at the moment. Yeah.
Yeah, I think it should help, guys. And yeah, as I say, definitely do kind of keep those habits and tips in mind for going forward. I think it will be very beneficial.
Okay. All right, guys. Thank you again for showing up, and take care over the next couple of weeks, and do keep in touch with us. All right. Have a good day.